So we are alive and well on the internet with lawyer, entrepreneur, soon to be author, parent. What else are you? What other titles do you hold in your life?
I was a goalie in high school.
Former goalie in soccer, I'm imagining.
Soccer, yeah.
Cool. Yeah.
It's been a while.
Did you play other sports? Former athlete?
I played baseball for the 1 year my tiny school had it.
Cool. Former baseball player at a school that only temporarily had a program.
Bench rider.
Awesome. As folks kind of get in here, just to give some understanding of what we're doing. So we, at the beginning of COVID, what do you call it? Like, what do you call this time period? At the beginning of stay in place orders?
I'm going with COVID. Coronavirus is too generic.
Right.
So we got to go with.
But the beginning of COVID would have been like, kind of a long time ago. Like, this is something people like to blame, different people for not alerting the public to. So the beginning of COVID could have been like November 2019 or something, right?
Yeah.
With the beginning of when it was
a fuzzy start.
The beginning of the CARES Act was kind of like when you first came on and started sharing a little bit about when you shared a little bit about helping people try to understand some of the confusion that had happened there. And since then, the world has stayed at some levels. There's been like no progress for a lot of business owners since we had that conversation, where nothing has moved forward or it hasn't moved forward very much. And for others, things have moved forward a bit. You have some clients who have received funds. We have some clients who have received funds. We have some clients who are received zilch. You have some clients who have received zilch. And so
many.
Many. I send you updates anytime I talk to anybody. I always share updates, and it's like this depressing timeline if you just follow the thread. So if anybody's watching this and has any questions about PPP loans, EIDL loans, the SBA, navigating any of those things, hop into the comments, just drop any of those questions. We'll be sure to get any of those answered for you. We've got a couple of things that we're going to touch on. We're going to touch on any updates that have happened since we've got going there. But just in general, to get going, Mark, can you kind of just talk through a little bit of when we first had recorded this time together up until today, there's been further guidance and understanding issued that wasn't available at the beginning, or that people kind of didn't understand how things were going to shake out. What have you seen updated or clarified, or has there been anything like major, minor since then?
Yeah, so there have been a ton of updates issued, and they were across the board. It was a huge act, so it touched on every industry, and we've had agencies all across the federal government issuing guidance. So like Department of Education just came out with some, and they've had guidance about how the states can handle this. There's been a lot of guidance on the unemployment stuff. Department of Labor has a bunch, and so on. The main things that small businesses care about are coming from the U.S. Treasury or the Small Business Administration itself. And the SBA put out a Q&A 3 days ago, something like that, most recently. And every one of these things that comes out offers a little more guidance. There's still a lot of ambiguity on the edges, but for most businesses, I would say that we have pretty good guidance on things that are included and are not included. Probably the biggest change from when we talked last time, about a couple of weeks, almost a month ago, it was a month ago when the law was signed, is that in the actual law itself, it suggests that contractors will be included in payroll costs. So a lot of companies have 1099 workers instead of employees, and the way it was written, it suggested that they would be included, but Treasury guidance then later said they would not be included. And because those independent contractors are considered separate businesses, it was up to them to apply separately for their own loans. They couldn't be included in a company's loans, even if they spent all their time working for that one company. They weren't like truly independent. They weren't working for different people. So considering how few people actually got these loans and how fast this money went, it's pretty unrealistic that any of those contractors was ever going to get that money. The loan period opened for most businesses, I think it was April 3rd, where that Friday was, and then it was the 10th for contractors. So the money was half gone by that point. It took 2 weeks to get through the full $350 billion. So
that's wild.
So that was a huge change, and that impacted a lot of people who were expecting to be able to include contractors in their payroll costs, and contractors who were expecting to be included in it and be paid through those loans.
Yeah, because we had spent a lot of time trying to understand that at the very beginning, based on how the law was written. With the Wonder Jam, our business has we had a team of 12. 7 of those were contractors. Half of those contractors had all of their money earned from the Wonder Jam, and so we were even navigating with those people of like, are they included in our game, or are they their own thing, or how is that being handled? And yeah, so that's changed quite a bit.
Yeah. The law suggested, well, the law said payments to contractors are included, but the Treasury decided to read that to mean essentially payments to contractors by themselves, from themselves to themselves.
Oh, got it. Yeah. Because
It's
for a lot, that does make sense, because for a lot of small business, or for a lot, like someone who's just a sole proprietor, or even it has an LLC, they would not technically be an employee under definition of that law.
Yeah, exactly.
It makes sense based on I was always I'm always like, you can just tell sometimes laws are written by people who are not running a business, because it's confusing in a way that only people who don't run businesses would be confused by.
Especially 800-page laws that are written in 2 weeks or whatever it was, a week and a half.
Yeah.
There's a lot of sloppiness in there.
Yeah, it's like when I was rushing through like a senior thesis, the night before it was due, trying to cram 32 pages of something together.
It's basically that, but with $2 trillion on the line.
Oh, that's depressing if we think about it too much. If any of you ever feel like you're not doing that good at your job, there's people with higher stakes than you who don't know what they're doing. So,
just no idea, just making it up.
That's wild. So tell me a little bit about, or you can continue to touch on things that have updated or changed, but also let's talk a little bit about kind of how you've seen for your clients or the network of businesses that you hang around in. How has this progressed? Like, how has this actually played itself out for real business owners? Not just how the law is written, but how has this manifested itself?
Yeah, so I think anyone who's paying attention to the business news has some idea that most people who apply for this loan are not getting it. Particularly, that's true with smaller businesses. The bias that I've seen anecdotally from a good number of cases is people who had a pre-existing relationship with the banker tended to get the money, and people who didn't. That's particularly true if you had a private banker. So like we have a client who has a private banking relationship, moved up from the standard commercial, they got bumped up. They essentially had concierge service going through this.
Yeah.
They have a large payroll, and so they got a lot of help. The bank makes a lot of money on that. Super helpful for the client and so on. But that's sort of the number one correlation that I've seen. It doesn't have to be a private banker too. It's people who have businesses below that level, but just have regular contact with their banker seem to get through quicker.
Yeah.
I can't really see too much of which banks are doing best in handling it. It seems like they all fumbled really badly initially, and then they started picking up, especially the big national banks. So like Chase, even Huntington, which is the leading SBA lender in the country, didn't start taking applications till the end of the day on the first day. And I talked to the banker over there, and it was bad. He was saying, this is a week out from when they opened, he was telling me that he had submitted on the first day something like 14 applications, and one of them had been approved. And he walked me through the days, and it was all like that. It was like 1 in 10 had gotten through at that point. So most people, particularly smaller businesses, didn't end up with the money, which is why Congress had to scramble. The press was really bad. It wasn't a great look. You've seen a lot of these large, even publicly traded companies that got in under convoluted employee size rules. It's supposed to be 500 employees, but I was just looking at a company that had 10,000 employees, and they managed to get in. A lot
Yeah.
of these guys have
How
given
did
it back,
can you
but
explain, just for people paying attention? I know because of comments that I get, that some people pay attention to this either because you and I are just so attractive that they just tune in and they don't know why, or um, even to like a casual, maybe a non-business owner, they're paying attention to stuff like this. This is like the PPP and the CARES Act is like headline news for a lot of people. They're familiar because a lot of the local businesses or restaurants or their like neighborhood stuff they support is talking about it. Can you explain how, just from like an overview, how did large companies, how were they able to get through all of that when it seemed as if it was for companies with less than 500 employees?
so it seems like it was different from case to case. So that it's supposed to be capped at 500 employees, and some businesses seem to have aggregate or de-aggregated that between different locations,
Yeah.
particularly restaurant chains.
Yep.
And then the 500 is actually also a soft ceiling because the SBA has its own rules around what constitutes a small business in different industries. So
Hmm.
some industries are going to be higher than that. The 500 is sort of like the lowest ceiling, but there are other ceilings for different industries.
Yeah.
And so it seems like between gaming the numbers, gaming the rules, and using those other SBA numbers, looking at like business size and so on, people were able to go way above what was originally expected. One of the things I think is going to be an issue is that in getting the application, just submitting the application, you have to certify that it's necessary for your business because of the economic circumstances. And it's a pretty vague certification, but there are some companies that quite clearly are not impacted negatively by this. I mean, I just saw in the New York Times, there was an article about a bunch of these, and one of them was a company that was making ping pong tables and that kind of thing. And their sales were way up because everyone's stuck at home,
Yeah.
right? So people are ordering all these in-home gaming, whatever, ping pong tables and so
Yeah.
on. They had a huge line of credit and they got this loan. So like clearly they didn't need it and they were abusing it. And they were one of the companies that ended up giving it back, I believe, because of the bad press.
Yeah. Yeah.
So that
Yeah.
money in theory is coming back out, but we'll see.
We'll see. Yeah, yeah, yeah. Based on the terms and everything, if you were a business and you have that money sitting in your account, you'd be you're hoping people are doing the right thing because there's not much incentive to not use it for sure. No,
Yeah,
that
I
makes
mean, even if it's not forgiven, so there's forgiveness rules, which I think every business is now familiar with. Every small business spend some time on those forgiveness rules. But even if it's not forgiven, it's a 1% loan for 2 years. So, the cost
yeah,
of capital for any business is above that, except
yeah,
unless you're a bank, the money costs more than that.
yeah,
So,
yeah.
yeah, yeah, it's a great
No,
loan.
yeah. It's a loan we all want. We all want that loan. Everybody wants that loan for almost anything. Tell me
Yeah.
about.
Well, one interesting thing, one interesting caveat on that is that I was just talking with a client today who they initially applied for it and didn't get it, but they're not going to apply again because their thinking is basically given the demand on their industry, if they got it, they could bring all their people back for 8 weeks and then fire them in 8 weeks. So no one's really better off from that. Their employees are mostly going to be better off collecting unemployment. Unemployment has an extra $600 a week for everyone. So, and that's a pretty big boost from state unemployment levels. So that helps a lot. It may not get people back to where they are. Famously, there are a handful of people in this country who are better off on unemployment. I
Yeah,
think Marco Rubio spent a long time on TV complaining about that.
yeah,
But
yeah, yeah,
for
yeah,
most people, they're not better off. But even so, to have your employer get 8 weeks of pay, bring you back, not have anything to do because the industry is kind of flatlined, and
yeah.
then lay you off, that's not really that great either.
Yep.
So,
We've had a client dealing with that exact scenario where, based on their industry, and what they're like what their business was, they could, and restaurants are kind of in this spot, right? Where like restaurants or gyms or any of those businesses that have been, that aren't going to be part of the first wave of reopening businesses. Those are the people hardest hit by all of this. The loan repayment and forgiveness is like within an 8-week window, right, of like opening
yeah,
back up. And
yeah,
so,
of
business
getting
owners,
the money. So,
yeah,
you got to get the money, and then you have to put everyone back on payroll immediately and get them showing up and paying them, or
yeah,
just pay them to stay home, I guess. But you
yeah,
got to get that fired right back up.
yeah, you've got to like pass through all that cash. I like love to explain to people how this actually isn't that helpful for people who need money. It is nice for a business owner, so I understand that. But it's very convoluted in understanding how to use it. Can you talk a little bit about that? So talk a little bit about the forgiveness rules, or how you see, based on your conversations with people, how is like the funds intended to be used in a way that they would be forgiven? Can you like outline a little bit of those things and then explain kind of what you're seeing businesses either do with it or how they're handling that?
Yeah. So the CARES Act had a whole section on forgiveness, and the parameters around forgiveness were if you spent the money in the 8 weeks after you got it on payroll is the main one, but also on utilities, on rent, on mortgage interest, you could have your loan amount forgiven. So you would end up owing nothing. There's a 6-month deferral on interest, so no interest would be accumulated anyway, and you'd have the full thing forgiven.
Yeah.
After the law was implemented, the SBA came out with guidance saying that 75% of it has to be on payroll to be forgiven. So if you spent if you spent more than 25% on those other items, they wouldn't get forgiveness. It would still be a cheap loan, but it wouldn't get forgiven. So that was the first sort of wrinkle in the math. Although I think that didn't impact a lot of people because most people assumed that the Paycheck Protection Program was designed for paycheck protection. And, why all that other stuff was lumped in isn't exactly clear, but it should sort of be used to bridge the gap. So if you end up with like 90% of it spent on payroll, then if you have a little more spent on utilities and so on, then yeah, you can get it all forgiven. The 8 weeks is important because it's 8 weeks from as soon as you get the money.
Yeah.
And when you're approved for the loan, you can defer receiving the money for up to 10 days. So that's something to take into account for anyone who's authorized and doesn't have their team up and running right now. You can kick it out a couple of days. I would be scared to do that given how fast the money's disappeared. But in theory, once you've been approved, the money is earmarked and it's not going anywhere else.
Yeah.
So you have a couple of days to kick it out, but then it's 8 weeks. And so you need to be careful to track that over that 8 weeks and spend all that money in that 8 weeks to get the forgiveness.
Yeah.
Again, if you don't, it's not the end of the world, but it's super cheap, but a 2-year term isn't all that long for a loan. So depending on the size of it. Yeah. I mean, I've seen people advocating setting up a separate bank account entirely. So all the money just goes into that and it's very easy to track it.
Yeah.
One good recommendation I saw was to, as soon as you get the money, while you're getting the money, talk to your bank about what is their checklist that they're going to require for forgiveness. So make sure that you have all those documents and that you're preparing everything up front that you're going to need in 8 weeks and have those records right. Every bank should have some idea of what they're going to require. I mean, the SBA obviously has specific requirements, but every bank's going to be a little bit different in the way they interpret those.
Yeah.
So whoever your bank is, make sure that you understand what they're going to ask for in 8 weeks and what they're looking for in order to get that pushed through for forgiveness.
Yeah. Whitney just asked a question on Facebook. So she said, so just to clarify that, it needs to all be spent within 8 weeks for it to be forgiven.
Yes. Yeah, exactly.
The PPP loan.
Yeah.
And that's like based on, from what I've heard, and I think just clarifying what you said, that's based on when, like the day the money hits your bank account, you start like a 7-day countdown clock, right?
Yeah. So the SBA just issued guidance, which I mentioned earlier, that came out a couple of days ago, and that was one of the points that they addressed. Was specifically, it starts on the day it hits your account. You can defer it up to 10 days, but the day it hits your account, that starts the 8 weeks, and then you've got to spend it all in that 8 weeks.
Yep. Can you so talk a little bit about, I think there's like a bunch of different numbers that have floated around between the EIDL and the PPP. There's like an advance of something that's one thing and there was another thing. Talk about with the PPP loan, the one Whitney's asking about, forgiveness is like the whole thing can be forgiven, none of it, some of it, partial. What is that?
Yeah. So the entire amount is eligible for forgiveness as long as you spend it all on the certified things or the qualified things, which is the payroll and utilities and so on. If you spend it on all those things and you follow the 75-25% split that the SBA requires, at least 75% on payroll, then it'll all be forgiven.
Cool. It should all be forgiven based on the way that it's understood. It's like how I think
should all be forgiven.
We're like, this is like a theoretical financial product that is we're not sure about yet. So
Absolutely. Yeah. So my theory on that is the banks are making a 5% commission fee on transacting these. And by the way, the numbers I saw was like $6.5 billion in transaction costs already paid out on this. So banks are doing okay. It scales down from 5% if the loan gets bigger, but at any rate, they're going to make most of their money up front, and then it's only 1% interest rate. So the banks are making like like half a point spread, something like that, 50 basis points. So not a lot. And if it's forgiven, the amounts basically the SBA pays them as if the loan were defaulted. It doesn't hurt your credit or anything, but that's the mechanics they use on the back end.
Yeah.
Since the SBA guarantees loans. So it's like as if your loan had defaulted, the SBA will just cut a check to cover it all. My guess is that most of these banks would rather get those fees and then get these things off their books quickly, get them paid off. So they'll probably be pushing to have things forgiven.
There's real
like things
no
that are sort of edge cases
to process receiving the money again.
Yeah, I mean, if the bank hangs on to it or they sell it in the secondary market, it's not going to make that much money for them. And then, then they have default risk in 2 years that they're not earning a lot of interest on, and it could default in 2 years. And then I guess they go back to the SBA at that point, but may as well. I would think most banks will want to take care of that up front.
Yeah.
Instead of kick that down the road.
Kind of like you could see a train wreck happening, but hopefully no one's incentivized to cause one.
Yeah.
That's kind of what hopefully.
The incentives have been pretty screwed up so far.
Yeah. There's no, we're incentivized. Hopefully it doesn't seem too obvious why somebody would screw over that system. But who knows? The world's wild. No, that's cool. Tell me a little bit about, so one of the things that I've seen in our world is you talked about this a little bit of some of those businesses like restaurants, salons, bars, anything that is staying closed. Some of our clients in those industries have received funds, and now they're having to decide within 8 weeks, based on in Ohio, based on some of the plans that the governor had issued and kind of talked about yesterday, those folks, at least for 2 weeks or for a while, are not going to be planning on reopening. And then it's a question mark as to when that happens. So have you seen, maybe take off your understanding of the law hat and just what you've seen people doing that you've been like, oh, that seems like kind of a smart approach, or this seems like, how are people thinking about it?
So one thing that is on the law side is the forgiveness scales down based on reductions in headcount and reductions in payroll. So if you've laid people off, then the amount forgiven that's eligible for forgiveness is going to scale down. So if you end up getting a loan that was based on the full amount of payroll before this all started, which it would be, and you've laid off a lot of people, some of that's not going to be forgiven. So what you can do though is just pay that back. So spend some of it on payroll, the forgivable amount, and then just pay the rest back, or hang on to it as a loan. There's not an unlimited number of things you can spend it on, but it's relatively broad.
Yeah.
That even if it's not forgiven, it's a short-term loan.
Right.
But if you don't want to deal with that, you can pay back the portion that wouldn't be forgiven. So if you end up, let's say you had 25 employees and you're not going to be able to open your restaurant again for weeks. Who knows how long it's going to be?
Yeah.
It's going to be probably outside of 8 weeks. You can hang on to it and see during that 8 weeks and then pay back what's left over at the end, and then maybe bring back 5 of your 25 to do things in the restaurant. So this is an opportunity. Restaurants close down. You've got to practice, all the social distancing rules and wear masks and whatnot, but it could be an opportunity to go in and paint your restaurant or your bowling alley or whatever it is that you have, where you can't have people in. Like you can do some sort of cleanup stuff that hasn't happened in a long time, some sort of that kind of thing.
Yeah.
Just like a little bit of maintenance and whatnot, trying to find other creative uses for people, but you're not going to have your full staff of 25 people or whatever it is in doing that. And so some amount of it's not going to be forgiven because of that. That part, then it's up to you to decide if you want to pay that back because it's not going to be forgiven, just pay it right back immediately, or treat it as a longer term loan and use it for other permitted purposes.
It's interesting to think about the percentage of the overhead reduction or the headcount reduction. Is that based on hours? I know there's a couple of formulas that float around as far as it was full-time equivalent, I think is what that number was. So you need to continue that number, like the full-time equivalency number. And I think if you Google there's probably a handful of calculators that are floating around the internet at this point. I know the IRS has a couple, and our payroll software had one as well. So you can find those, but you might have this was pretty true for restaurants and things like that, where somebody might be working 11 hours a week, or you have 4 or 5 people working 11 hours a week or 10 hours a week. Is going to turn into one or one and a half sort of full-time equivalency. People.
Yeah.
So you just
That's what the
you gotta maintain
calculation
that
is
number.
based on. Yeah, so it's there are two ways that you could calculate it for the application: either the 2019 year or the trailing 12 months from when you applied. So just the last 12-month window. And if you have seasonal employees, there's a different formula. And if you just started up relatively recently in the last couple months, then there's another formula. But for most people, that's going to be either 2019 or the last 12 months is what you look at. And then you come up with what was your average number of full-time equivalent employees each payroll period.
Yeah.
And then you have to maintain that. And you have to maintain payroll, the actual payroll amount. You can't reduce anyone below 75% of what they were making before in the 8 weeks that you calculate. So people can get pay cuts. You can scale back, but you can't cut more than 25% off before you have to start reducing the forgiven amount.
Yep. Yeah. So if I can't lay a bunch of people off, bring them back in at minimum wage and recoup all the saving or whatever.
And pay yourself a huge bonus or whatever. And
so Krisha had asked, so any money that goes to payroll will be forgiven. That's through the PPP loan. All of the money, so 75 is the basement for that percentage of payroll, right? You could have 90% of it could go towards payroll. That would be forgiven. There's some guidance around, or there's some restrictions around. I'm trying to think of a better scenario. So somebody has 20 full-time employees, equivalency of employees before, then they bring people back. They have to hit, if they only hit 18 of that, that would be 10% of that's going to be reduced or not forgiven, or how is that? Do you know does it any sense of how that's figured out?
Yeah. So the forgivable amount will be reduced proportional to the payroll cut, or both the payroll cut or the headcount cut, or both. Cool. If you have both. Exactly how that's going to work is still, I haven't seen anything totally definitive, but it gets, you can kind of figure out roughly what it's going to be. From the example that you used, you can see it's just going to be scaled back proportionally. So if you end up in that situation, you end up with 18 people, then you have the extra 2 people worth of payroll that you got money for, since the loan amount is based on your payroll beforehand. Then you can decide what you want to do with that money. And so then some of that money could be used for utilities and so on, but you're still going to come up with that total amount that's forgivable is still going to be reduced, even if you use some of it on other forgivable expenses.
Yeah, that makes a lot of sense. There's famously, there's not much restriction around you can hire on family, hire on your spouse, hire on whomever. Those are going to count towards your full-time equivalency. We've seen people do that, or bringing on. There's also not much theoretically you could hire a person and have them do no work. You can pay people for stuff,
right?
Have them do nothing and just high five each other at the end of the day.
I mean, honestly, I think the federal government would be fine with that, because it's, to some extent, this is just shunting unemployment through small businesses to try and prevent that unemployment number from looking too terribly bad. Worse than the worst in history.
The unemployment number is skyrocketed to it's one of those numbers now that is doesn't matter. It doesn't, as it goes up, we watched the graph happen the first couple of weeks, and now it goes, it's like the national debt. It's a number that's so large that it doesn't feel like anything.
I saw that it is essentially equivalent to 25 states worth of all of their payroll, all employees in 25 states
out of 50, 25 out of 50 states.
There's some small states in that.
It's just small states. It's not the big states. It's not California and New York would still be employed. It's wild. And I think that's part of it, right? Is this was supposed to be unemployment, to mid, that was the point theoretically. And we're still, I don't know, our business got in, like we got an application number in the first round, said that we were told like, and so theoretically the funds from that first chunk of money were whatever was supposed to be for us is still sitting allocated for somewhere. And we still haven't seen any of those dollars. So,
Did you guys get an SBA number?
yeah.
Oh, I didn't realize that. Okay, yeah. So
Yeah.
that what they're saying is that if you got the SBA number, the money is earmarked, and
Yeah.
they only gave numbers up to the amount of money that they had. So it should be earmarked somewhere. It might be in a warehouse, stuffed away. And
yeah. The paper's like it fell underneath a shelf somewhere, so there's not a lot to do. No,
I'll
that's
find
cool.
it someday.
I think, yeah, we'll get there. We're fortunate in that we've had, we help people get stuff going online. So everyone's trying to get stuff going online. So we've been able to find, stuff to do for our team that's still here. Tell me a little bit about, so you had talked a little bit about one of the things I think has been and I would encourage anybody listening to this. This is kind of just a thing I wanted to say, is to think through, the exercise, like whether you get funds or don't get funds, the exercise of thinking through how you would use something, particularly for our business, the EIDL was an interesting thing of like, if we were given a larger amount of money with less than like, at more than 1% terms, it was like 3.5% terms. Sort of the mental exercise of how you would use that. Making a plan for how would you make a smart investment with that money is something it's a useful exercise in these moments where the future is not that certain, right? Where we don't know what the economy is going to look like in 30 years, or I would imagine not everything in the whole world is just the same as it was after this. I think there's a lot of trends that have been sort of jump-started by this moment in history. Spend some time thinking through how you would use that. It pushed Allie and I in our business to think through, just to be a bit smarter and a bit more deliberate, and like really thinking through how you would use what's a smart business move for you, that's going to pay, it's going to come back for you. The other question, so I'm going to kind of ask if people wanted to, I've watched you and your firm, Stansbury Weaver, be very helpful to people, in these moments and just try to advise and give people the next steps. Tell me a little bit about, one, if people want to learn more about you, Stansbury Weaver works well. Your social, yes, .com, right. Or just Google it. But StansburyWeaver.com is useful. Your social media accounts are about to be like humming with some interaction as well.
That's my understanding. Yeah. Looking
forward
to that.
Yeah. Talk a little bit. You have a unique thing that your firm does, which is you call it General Counsel as a Service. And I think when I heard about it, I was like, oh, this is actually a very, very cool way of interacting. Can you talk a little bit about kind of what that looks like or where that came from?
Yeah. So it's, the name is sort of a cheesy spin-off on software as a service, which is the idea that you're not buying software anymore, you're renting it. And what we found, we've been a traditional law firm for a while, billed hourly, did all that stuff. And what we found is that the hourly model is pretty terrible for most clients, particularly small and mid-sized businesses. It discourages clients from calling us before problems spiral out of control. And we don't litigate. We're a business firm. We do transactions. We do corporate HR, IP, that kind of stuff. If things go sideways, we're going to send it out to a litigator. So unlike a lot of firms, we don't benefit when things go to hell.
Yeah.
So what we do want clients to call us ahead of time. If things are, if something's coming up, call us early and we could probably help mitigate it, or at least get the company ready to deal with the fallout if there's going to be fallout. So what we came up with is this model that we call General Counsel as a Service, which is unmetered calls and emails, text, Slack. We get on Slack channels with a lot of clients. That works really well. And we don't charge for time for any of that. And for most businesses, we also include all the routine things that businesses need. So regular contract review, HR support, general counsel guidance on all kinds of issues that come up. So, and that can expand or contract based on what the company needs specifically. We'll have a scope, but every scope at least includes all of the basic stuff that companies need to run day to day. And then we're just available. So we'll be on, like I said, Slack if a client wants to do that. We'll share a channel. Otherwise, email and call, text message, whatever. And we're available when clients need us to the extent that they need us. And so for, as a practical matter, that means some months it's slow and clients pay us a flat amount every month and they don't use us a lot. And other months they're slammed and they use us a ton.
Yeah.
And for us, it tends to even out between clients, but it smooths out the fees for our clients and makes sure that we're on demand all the time, sort of like an insurance product.
Yeah.
So if things really go sideways, we're there to help out.
Yeah.
And we can weigh in, and we have a few other features that we include in there. So we'll help out with contract templates, help build sales playbooks and that kind of thing for contracting, depending on the clients. And then we meet quarterly with our clients to do what we call a strategy session, where we'll sit down and step back and take a big picture view of the company and talk about the direction, the things that are keeping the business owner up at night, what are their main challenges, and what kind of things should they be addressing in the next quarter. Which, it's so often running a business, it's easy to get lost in the day-to-day weeds and not look at that stuff.
Yeah.
So particularly in a relationship with a service provider like your lawyer, the hourly model has trained everyone to be so transactional, where you call a lawyer when you need a specific thing, which by the time you call, you've usually figured out what the thing is that you need or you think you have.
Yeah.
And so you just call up and you just order it. Here's the thing I need, trying to make this fast, get this thing done. We're trying to back away from that and make it more of an integrated model. The bottom line is we can provide much better counsel if we are involved in a business and know what the business is doing, who's on the team at the business, and what the personality and risk profile of the business founder is, and whoever's running, who's running day to day, trying to understand what they're going after. We're able to provide much better individualized counsel, not so much like here's template guidance that we pulled from some continuing education seminar we went to, but here's what it means for your actual business.
Yeah.
And, we have clients who are across the spectrum on risk tolerance. Some people are swinging for the fences all the time, and some people want to be very, very cautious. So we've learned to adjust our guidance to them. And we are able to do that because we have ongoing correspondence with everyone.
Yeah. No, that's really cool. It's been, as we jumped in as a client, I think we're sitting down at the first strategy session. It was very normally I would just be like, oh, when I need someone to review contracts or some client isn't paying us, I'm going to talk to you, which is the least interesting thing. And then also knowing your whole team is the least interesting thing. I mean, you all are kind of way more entrepreneurial than your typical lawyer, for sure. And you all get jazzed about talking about the ways a business could be better, or giving advice or consulting. And I remember sitting down for a strategy session, and all of our brains gravitated towards the weirder things I was trying to do in my head, where the normal things of contracts and things like that is we're cool, these are done. Let's talk about the interesting stuff. And it's been fun to get to work on. It's fun in a different way. Where I think most people are just terrified to talk to a lawyer. We work with so many small businesses where I'd be like, you need to not be talking to me about this for sure. But I think people always turn to somebody else. So how do I handle this? Or they go on Facebook and they just post this is a thing. I'm there are some things you need a person to understand law for, and this is one of them.
Yeah. I mean, that's in that friction is one of the things that we work hard to get rid of, and part of that is the billing model. Part of that's just our general approach and trying to be accessible and, just a little more real and a little less stuffy.
Yeah.
And just frank with business owners that, I was actually been thinking a lot about this. One of the main things that we talk to very early stage businesses about is not spending money on legal, because it's what are your real risks? You could have a bad contract and that could go really sideways, but a much bigger risk that's more likely to manifest is that you don't have any customers at all, right? Your business doesn't exist because you don't have customers. So spend money on building your product and finding customers and all that. And you don't need to hire lawyers right out of the gate. So we try to come with that sort of straightforward, honest approach of yeah, the stuff we do is important at some point, but in the grand scheme of risk, you've got to look at the whole spectrum. And
Yeah,
so we try and meet people where they're at on that.
yeah, there's this cascading like importance and priority level that is very different as you go through. Like the second like the COVID stuff hit, I was like, hey, I've got I have three pressing needs right now, and you're like, oh, let's talk to John Weaver, the Weaver of Stansbury Weaver. He's got that. He'll give some guidance. He just gave advice. I didn't need anything. I just need someone who was like, hey, is what I need to make sure, how do I need to handle all these things? And you kind of jumped in and helped out on stuff that you had the specialty on. And yeah, it's been super cool. We do the same thing with websites often where people show up. It's like, you just understand cash flow. If you're running a business, I think you're running a small business, you understand cash flow. You just understand what it feels like to release $3,000 for something, when, and especially in these moments, you definitely realize it, where if you're like, could I just meter, or could I just like plan this out over the year and just budget it, then it would feel better. And we do the same thing with websites, where someone shows up, they're like, I think I need a website. I was like, I think you need like 7 other things before you need a website. Which doesn't incentivize, I'm not like selling anything to people in that world.
Yeah. Yeah. But, I mean, you're like, we're both in the long game on that, right?
Yeah.
You help the customer survive, the client survive, and then they'll come back and they'll actually be able to do the thing right.
Yeah.
Instead of, I mean, I've had people insist on right out of the gate, we need all these corporate documents, we need indemnification agreements between all the founders and whatever.
Yeah.
And like, I will advise them that that's not the way to go. Save your money, spend it on, buy AdWords, buy something, prove that people even want your thing.
Yeah.
But sometimes they insist and like, okay, fine, I'll take your money and give you your thing. And inevitably those companies do not succeed. And so that hurts us in the long run too, because we don't have a client that had what seemed like a viable idea. They just burned their money on the wrong things or whatever. They're playing startup, whatever.
Playing startup that's a great, let's start that podcast. That's a good title.
Yeah, we've got a lot of examples of that, unfortunately.
Make people mad. No, that's good. Yeah, no, I appreciate it. If anybody has any questions for Mark, if you want to, if a person slides into the Wonder Jam or my personal direct messages, I can get you connected. If you'd like to talk to Mark or somebody at Stansbury Weaver about the General Counsel as a Service. It is my job to tell you about a thing that we have going on. So the Gem Club is our online membership and community. There's about 90 some odd, I didn't check the numbers this morning, but we had a couple of new people join, 90 some odd members inside the Gem Club who range from one-person businesses who are maybe doing like a couple, low 5 figures a year of revenue to people managing teams of probably like the largest one that's in there is like, I want to say like 70, and running a pretty sizable, significant business. And so it's a lot of different types of folks. Everybody who's a pretty scrappy is scrappy in there to help each other out. We call those people scrappy and soulful business builders. That sounds good. We're trying to figure out how do we title our people. Who are they? So that's kind of the makeup of those folks. Mark is a member and hangs out in there as well.
Yeah.
And there's a couple of
it's fantastic.
It's a very good source of legal advice because there's there's like a pretty wide range of folks in there. It's a solid crew of people. Anyways, if you go to the gemclub.com or you can go to the wonderjam.com, there's a link at the top of our website. There's a free week trial for as long as we're not allowed to go to concerts. We're keeping the price at we have flattened the curve pricing, which is $7.99 a month or something a year. I forget what the yearly number is. 82. I don't know. You'll figure it out when you get there. At any rate, you get a free week trial so you can check it out, see if there's anything in there. We've got a bunch of courses and a bunch of other cool stuff happening that we'll announce on Friday.
Nice.
I'm not going to announce it now.
Very cool.
Cool. Thanks, Mark. Appreciate it. Thanks, everybody who watched. If you have any questions, you can hop in. There's the last time that we did this, some people had hopped into the comments of the video and asked a couple of questions, and I was able to clarify something or I was able to kick it over to Mark, make sure we get a correct answer versus one I just make up, and then get back to you. So we can handle all of those things. Thanks for paying attention. Take care of your business. Stay safe. Wear a mask. Wash your hands. Do all that stuff. Thanks, Mark. Bye.
Thanks, Adam.